What's up everybody and welcome to another video. My name is Athena and in today's lesson we're going to discuss candlesticks. Now, more importantly, we're going to go into what a candlestick is, what makes up a candlestick, different time frames and patterns, and then we'll have a nice little conclusion. Now, first of all, we have to discuss what a candlestick really is. Now, a candlestick is a visual representation of price movements within a single bar. Now, down here we have a candlestick chart that is on the daily time frame. So each one of these candles represents price action that happened during one whole day. So each one of these is a particular day. So it's pretty much all the price action that happened during that day is visualized by this candle. Of course, we have the green candles and the red candles. Red means down, green means up. So if price did move up within that particular day, it will show up as green, and red would be if we had a little bit of a downside. Now with candlesticks, we can look at different patterns. So each one of these, like we said, is different price movements that happen within a particular time frame. But the way they look can help us figure out what kind of pattern they're showing, right? Depending on the pattern, it might be bullish, bearish, or maybe neutral. So it can help us a little bit visualize if, per se, the next movements will be either to the downside, the upside, or neutral. Now keep in mind, just because you see a pattern doesn't mean it's going to play out, but it helps us be able to use this within our toolbox to add more confluence within our trading. Now, first of all, let's discuss what makes up a candle. Now, each one of these candles is pretty much the same. You have the open, the close, the low, and the high, or OHLC, open, high, low, close. There you go. OHLC. So we have the candle body, which is this block, right? Which is this block right here. We have the wicks, which are these thin lines right here that we can see on the extremities. On a bullish candle or green candle, we have the open. So this is pretty much where the daily opened at, or where the time frame opened at. So if we're looking at a daily time frame, this is where the day has started. If we're looking at a weekly time frame, this is where the week started, right? This is where the candle or price started for that candle. We have the low, which is the lowest point it got to. We have the high, which is the highest price it got to, and then we have the close. So in a daily candle, we have 24-hour time frame. All the price action is in here, right? So it opens at 8 Eastern, and it closed at 8 Eastern the next day. Right around this area, and then we'd have a new candle the next day. So we have the open, where price opened at, the low, the lowest point it got to, the high, the highest point it got to, and then the close, right? So this is where the time frame closed at. And then we have a bearish candle or red candle, and then we also have the body and the wicks, and the opposite is visualized within a bearish candle. So the open is up above, right? Because price is moving down. We have the open, so this is where the daily or weekly or whatever time frame opened at. We have the highest, so this is the highest point the candle or the whatever chart you're looking at got to. The low, which is the lowest point, and then the close. So this is where the time frame closed at for the candle, right? So this pretty much is what makes up a candle. Now let's talk about time frames. As we can see, we're going to move up from the monthly down. So on the monthly time frame, we can see that each one of these candles is a month. It starts on the first of every single month. So each one of these candles is the price action that happened within a whole month, right? And as we go down, we have more candles, as each one of these is a different time frame. So each one of these is a weekly candle, and they all look different. The lower the time frame you go, the different they look, right? So each one of these candles is going to look different. So keep in mind, the higher the time frame, the more important a certain candle is going to be. So if you're looking at the 5 minutes and you're like, this looks like a pretty bearish candle, or hey, it's this pattern, right? It's not going to be as relevant as, say, if you're looking at it on the daily time frame, right? So the higher time frames take precedence over the lower time frames. So if you're a new trader, definitely focus on the higher time frames, the higher candles. So I love the daily because it just is, I think, the best time frame to look at candles, and then higher. But the daily is pretty much where I sit at in terms of candles. I don't like to look at anything on the 15 minutes, 30 minutes in terms of candles, but the higher time frames are going to help a lot, right? So as we can see, each one of these is different. Now, when it comes to examples, let's look at a couple of examples about these candles, right? So we have this bearish candle, this red candle right here. As we can see, the open was right around here. We have a little baby wick, but it's not really much price movement. So price opened here and went all the way down here, and then it ended up closing right around 20,800. So this is a big price move, but this is how we can tell the open, the high, the low, and the close, right? So this is important when you're looking at a candle. And the wicks also, right? Each one of these is the high and low for each green and red candle. But the wicks and bodies are going to be pretty important. But keep in mind, just because you see something on certain candles doesn't mean they're going to play out per se. All right. So we also have patterns. So the reason why candles are great is because a lot of the times you can see some candles and they look like there's certain patterns, which is important. So if you're seeing a bearish candle, you know, on a big up move, that's going to give you indication of, maybe I should, you know, chill out, or maybe this is a good shorting opportunity. But don't take the candle just as a signal. This should only be used as confluence. So if you're already thinking about a short position, or you're thinking about selling and then you see a candle and you have a lot of confluence, then maybe that's going to give you good indication of maybe entering or exiting a trade. But don't take the patterns themselves and take a trade, right? That's the worst thing you can do, because a lot of the times, or sometimes, even though you do see a pattern, it doesn't mean it's going to play out. So only use this for confluence, of course. But as we can see, we have both bullish candle patterns, and we have bearish, and we also have neutral. So a lot of the times you might see a doji, which is, it looks like this, right? There's barely any candle body. But these are all important, right? So sit down, take a screenshot of this, and save this, right? But like I said, bearish, bullish, neutral, but please don't take the trade based out of these patterns. All right, so I do have to mention one thing. So for patterns, make sure that if you're looking at them, not to take a specific area of consolidation, right? You want to have big moves. So a lot of these reversal patterns or candle reversal patterns, don't take it in areas of consolidation. Say, oh, we have a bullish candle right here. That means something's going to happen. We want to look into big price moves. We want to look at the candles with those big price moves to indicate some sort of reversal, right? You don't want to look into areas of consolidation where price just moves sideways and then see a pattern and say, well, this is it, right? This is a bullish, you know, hammer or whatever, which means price will go up, right? So look at the big price movements and then make your choices. But like I said, the higher time frames are more important. But keep in mind, patterns don't always play out. But with that said, that is our video for today. We discussed what candles are. We discussed what makes a candle. We discussed patterns. We discussed how to look at them on TradingView. With that said, go ahead and pull up any chart, right? Go to the daily or any sort of time frames, pull up the pattern chart, and then see if you can find any sort of candlestick patterns, right? See if you can see any hammers, any dojis of that sort, and just get familiar with your different candles. But with that said, that is our video for today. Hope you guys liked the video. If you did, hit that thumbs up. Go ahead and join our Discord if you guys want. It's free. There's a paid section, of course, but there's a free section where you guys can chat. And yeah, don't hesitate to ask any questions. We'll be more than happy to help. But with that said, thank you guys so much for watching, and we'll see you in the next one. Peace out.